As always, welcome to this stream. I'm Will Sebastian, pro multi-asset day trader and founder of the Profitable Trading Academy. If you can press the like on TradingView, if you're watching this, if you're watching it on YouTube, press the like, comment, share, subscribe, do whatever you can. I'm posting a lot. And of course, whether it's on TradingView or YouTube, my free training, which will change your trading, is underneath the video. As you can see here, https://bit.ly/Wills BPA. So I'm going to run over various charts today, and I'm going to do it in line with what we can currently see in the financial markets. You can see various global indexes risen, okay, and various ones fallen. CAC 40, for example, from the stock market, the DAX, the UK stock market and the Australian market have fallen, and you've got various moves on your other global indexes when they open. So if I just start off with something simple, everyone's coming in now. Say hi if you want to, of course, in the chat box. Okay, and I will respond if I can. I'm just going to reload up the question box so I can do that, and I'm going to move it over here. So welcome aboard if you're just coming in. Don't forget to press the boost. Don't forget to ask me a question. And if you're watching this on YouTube, don't forget to go underneath the stream. My free training is there. Subscribe, like, share, and comment. And of course, we will keep it rolling. So gold is really, really interesting as a chart, and I'm going to cover the whole thing now. There's a lot to talk about. So let's go over what we knew already. Firstly, if you go on a monthly chart or higher, 12 monthly chart, whatever it may be, and you zoom out a little bit, you can see if we take data from 1970, which TradingView has, luckily, gold was very cheap per ounce, 50 bucks. And suddenly, after 1970 going to 1980, $50 becomes 870. Okay, so $820 in 10 years. Then if you just carry on another 27 years, you get the same price. So it takes 27 years to go from this peak, whether you had financial problems, to back to where it was. Okay, then after that, what you can see is a sustained increase in the value of gold. So after that peak, okay, you fall, you have a little bit of a retracement there, and then you fall further, okay? And then what happens is you end up going along and along and along, and ultimately you return to the same point. Now, there'll be a reason why I'm doing this and showing you that. You'll find out in just a second. But it took you 27 years to get to that point. Now, what happens after that is you go a little bit higher to this point, and then you fall. Now, once you fall and retrace, of course, you touch on this early key moving average, the 40 moving average, and you start the trajectory upwards. And the price really doesn't stop rallying from 2009 all the way to 2011. You go up and up and up and up and up. Now, once you get to 2011, you don't get to the same price again, like we saw before. You don't get to the same price again as August 2011 until you get 9 years on to August 2020. Okay, so there's a big gap there again, just like we had a big gap there. And what you can see is basically, and what I'm saying is, the price of gold is rising over time. It's rising over time because people are seeing value in it. And the value of currencies is changing. Now, that, like I said, takes a long time to beat each high. But what you've got here, and how it's all relating into, like I said, what I was saying, is the fact that you've got three highs all hitting into each other in the same 3 years. Now, that is a lot faster than a 27-year gap and a 9-year gap. Okay, so it says a lot. Okay, there's a lot to be said from that. And you can see where we called it long recently, you touch on those early MAs and you're straight back up. Okay, now the fact that you've returned to this high so quickly, okay, from here to where you are now, shows you that there isn't as much sell side bias. Now, that is especially true at the moment because what you've got going on is potential wider spread of war. And when that happens, people get frightened, they get very, very frightened, and they buy gold. Now, you had that before, okay, amongst the Ukraine war. You've now got it again. So this succession of hitting this high level of price constantly is theme that has now gone from being a massive gap of 9 years, 10 years, 20 years to 3 years. Okay. Now, because you've accelerated above the previous high for 50 years, as you can see, the price of value of gold has gone up. There is absolutely no good in pretending that this high won't be broken eventually, because statistically, it's more likely that it will. Okay, based on what you've seen. Now, that doesn't mean you should buy the high. It doesn't mean that at all. You should just be wary. There's a chance it can go higher than the previous highs. And the reason why I say that is because people who are shorting now, they know it's a short. They know technically that is a good short and they're aware of the market sentiment. But there are some who are either on the wrong side of the fence in two scenarios. There's the people who are buying this, okay, which again, they would have lost their money already because you're buying a high, okay? It's senseless. You're buying into a place where you've fallen 3 times. That is not a good idea. So you shouldn't be buying it. Now, those of you who sold it would have already taken profits. The sellers are correct, and I'm short biased as well. But the adjustment I make is early exits, okay? And that's why I mentioned it before, because you need to take early exits when there's harsh sentiment. Okay, in other words, if you've got the market rallying and rallying and rallying, and there's a threat of global war, it's dangerous to be shorting it naturally. So if you did short it, you should do it in lighter size, and you should also take your profits very early because you can see this early support has done its job entirely, and there isn't rejection there. You cannot see or say that there is strong strength to the downside because it's not true. Okay, and you can see that simply by looking at this. Look at the immediate rejection. Okay, so if you're going to reshort this, I wouldn't do it where you are. I would probably look higher to these previous highs, but don't pretend you can't go higher than this because there's every chance you can, especially with the growing market sentiment in line with what is going on around the world and the threats of war. When people are threatened by war, they buy gold, okay, and they pull their money out of everything else. But just look simply, how many times have you fallen here before? Okay, statistically, you are more probable to make a good entry at the same point. Again, that is what trading is about. It's about probability. Okay, so bear that in mind. Probability is what rules the market. So coming up to this point, just like you've seen it several times before, I would far rather be short than long. Okay, so if you wanted to buy it, you should have done it down here. Like we said, I did call it, and you should have done it along here if you wanted to. But the higher the price goes, the less likely you are to go higher. In this case, you did because of market sentiment, okay? But if you look back to this point, which is almost identical as a move to this one, right? Then what you can see is after that, you start to fall and then you really fall drastically. So if you're not in it, I would just hold off to reshort it. That's all I can say. I wouldn't bother longing this unless you get a dramatic pullback. And that would only come about if you had a dramatic change in sentiment. Okay, so you've got support level 1 here. It's a light long zone, but you should never be buying when your stock oscillator is way up. Okay, you should never do that because if you do that, you're literally just buying into a high price. Okay, the market won't rally forever. It can rally for a long time. I'm not saying at all that it can't go up. I wouldn't be surprised if it does, but I'm just going to trade it sparingly. I'm going to trade it sparingly because there's a big shift in market sentiment. Okay? So, market sentiment essentially is the mood of the market. People are buying because they're worried. So you need to change your plans accordingly. Now that might sound easy, but it's not as simple as just saying it and doing it. You need to study how to do that. So it does come with a warning, don't try this at home, of course, unless you're in my academy. Many members who are in my academy and watching this stream or watching it back on YouTube, I'm sure will ask me similar questions. Okay, and I'm always happy to help. So just a reminder, if you're watching this on TradingView or YouTube, come underneath the stream for my free training, press like, ask a question, get involved in the conversation. I can help you with whatever it is you desire. But gold, particularly at the moment, is just a trading situation where you just have to manage your risk slightly more. You can see, like I said, you've had your financial crisis, and you've had wars previously, you've had COVID, you've really been battered on in terms of market sentiment events. But it's okay, because if you traded the range on this, on average, let's say if you traded between 2055 and 1670, it's just shy of $400. Or let's say a range of $400. Okay, as long as you could survive any kind of drawdown within that, you would have been fine. And that all comes with risk management. Okay? Your sizes have to be appropriate to your equity and your capital so that you can survive the deviation between high and low, or 20%. Okay? So just bear that in mind and bear those risk rules in mind, because you're going to find if you get a big change in market sentiment and you're one of those people that pretend this can't come down, you'll get screwed when it goes up. Okay? And if you're one of those people that's buying here, you'll get screwed if it comes down. So just hold off, because here is your market value to the short side, right? It's right where everyone gave you market value before and told you they liked it short, many institutions. So that's gold, and I hope it helps.